And particularly the last 6 months, maybe, you've seen gold turn into this momentum trade, and everyone is watching, from the sofas, basically thinking, oh, the gold price is going up a lot. I want to be part of that, and sort of leaping on the bandwagon, which has this sort of self-fulfilling effect.
Hello, everyone, and welcome back to the Personal Investor Podcast. I'm Ed Monk, and I'm joined today by my Fidelity colleague, Jemma to ask whether you should be bolstering your portfolio with some metal. Lots of investors seem to think so. We've just hit new prices for gold and for silver, and meanwhile, another metal, copper, is enjoying an historic surge as well. Before that, let me remind you that if you find this video useful or interesting, to please subscribe to the channel, give us a like, join the discussion in the comments below. It really does help others find what we're doing here, and it means you'll get new content as soon as it is released. That all said, Jemma, welcome along. How are you?
I'm very well, thank you.
Good. Let's start with gold, shall we? You and I spoke about gold back in November, actually. At the time, it had just hit a new high, and we wondered back then whether it was too late to get on board and what would happen with prices. So what has happened since then?
Well, turns out it wasn't too late to get back on board.
No.
When we were talking in November, gold was around $4,000 a troy ounce. Since then, it has climbed to a new record high of over $5,000 a troy ounce.
Yes.
So it has been pretty unstoppable. I thought before we press on, it might be useful to explain one piece of jargon. If you're sitting at home wondering what a troy ounce is, it's basically just a unit of measurement used for precious metals. It's a bit heavier than a normal ounce.
I've got views on this. This is another example, isn't it, of the financial world coming up with sort of mad jargon. So not only is it, it's not a troy ounce, just call it something else. Just call it a troy.
A troy,
So why is it a troy ounce? Anyway, not quite the same as an ounce.
No, slightly heavier, but that is by the by, really. All you need to know is gold is going up, and it is going up very quickly.
Indeed. Now, you've been writing on gold in the past week or so, and you made the point that movements in the price aren't always fully explainable. It can be a little bit mysterious. Does that apply this time round? What can we say has been driving that price higher?
So there are various things. So the first thing to flag, and it's probably the one that everybody thinks of when they think of gold, is that it tends to act as a safe haven. So you've seen time and time again in history, if there are wars or if there's geopolitical uncertainty of some kind, the gold price tends to rise. And we saw a really nice example at the start of this year when drama was intensifying around Greenland. That was when the gold price shot up again. So that's one factor that's driving people towards it. There's some other stuff as well. So currency has quite a big impact on the gold price. So over the last year or so, we've seen the US dollar fall by quite a significant amount, and that tends to be good for gold. Then we also have fears about inflation, and gold is seen as, in some ways, like the ultimate store of value. And this relates in some ways to its actual physical qualities, because you can't destroy gold, you can't corrode it, there's a finite amount of it. So it seems a very natural way to store wealth, and we have done for, many years.
Thousands of
humans,
years.
Exactly. So that's one thing. And there are also interest rates to think about. So interest rates have been coming down in the US and the UK, and that means assets like cash become less attractive because you're not going to earn the same sort of income off them. And gold, which doesn't pay any income, becomes relatively more attractive.
Yes.
So those are like some of the factors, and obviously a lot of them are interconnected. You don't see them as just discrete forces working on the price. But I think sort of a big thing to flag is that gold as an investment is just fundamentally quite weird. Like we spend a lot of time talking about it, speculating about what's driving the price, but often there isn't something really tangible. It's not like a stock where you're thinking, okay, it pays a certain amount of income and we can use that to gauge how much we should pay. It's much more finger in the air.
The haven point is really interesting. It obviously does have that role. At certain times, but you really think that through and say, so what, are we expecting everything to go that badly that we're all sort of bartering with gold? That things would have to go really, really bad. There obviously have been some pretty sort of, you mentioned some of the geopolitical issues that have been going on, lots of uncertainty out there, lots of dire predictions for the stock market, which are at high levels. All this will push people to seek these haven assets, won't they? But it's interesting, isn't it, that gold itself has been climbing higher and higher, and actually stock markets have as well. They've actually been moving in sort of tandem for this period.
Yeah, which is quite weird. That's got a lot of people thinking, well, something strange is going on. And then there's a lot of speculation about whether stocks are in bubble territory, is gold in bubble territory? Why are we seeing these two asset classes, which historically have moved in different directions, moving up at the same time? And
what has been the profile of gold's performance? I mean, stock markets tend to sort of go up with volatility. Gold's, how does that work? Is it sort of steeper jumps and periods of sort of sideways movement?
I think that's a fair characterization. So I think one common misconception of gold is that it is safe, therefore it moves in a very steady upwards way.
No.
And it doesn't seem to do that. You get these periods of explosive growth, as we've seen the last year, where it absolutely surges, and then often the price will come back down quite steeply or have extended periods where it doesn't really go anywhere.
Yeah.
It's often something people have in quite small quantities in their portfolio for those times when other assets are falling, because you think, well, actually, this is when gold comes into it.
Well, it's an interesting question whether or not that is changing, that role, and lots of people would have moved into gold in the past year because they've seen those price rises, and actually doing it because, as a speculation really, that the price has further to go. I just wanted to expand a little bit on the currencies point. We don't have to get into the reasons why currencies move or have moved in the way they do, but just expand on this point about why currency affects the price, well, of gold, but really any commodity, I suppose, priced in dollars.
Okay, so a weak dollar tends to mean high metals prices, high gold price. Mm-hmm. And that is because gold and lots of other metals are globally priced in US dollars. So if you're not in the US, if you're in the UK, for example, and the dollar weakens, you start to think, actually, that's looking pretty good value, because my currency, pounds, for example, sterling, will be more useful in that situation because you're buying in dollars.
I'll get more dollars for my pounds, and therefore I'll be able to buy gold more cheaply.
Exactly. Basically. It's pretty much the same sort of logic as if you were going on holiday and you live in the UK, you're going to the States and you're thinking, weak dollar, that means cheaper holiday for me.
Yes, indeed. Now, lots of retail investors, as I said, have climbed into gold in the past year or so. But really, demand underneath that has been underpinned by central banks, hasn't it? Bank of England, Federal Reserve. What can we say about that demand for gold? What's been going on, and can it continue?
So far I've been thinking about retail investors, institutional investors, but as you say, there's this other force behind the gold price, which are central banks. When we talk about central banks, we're thinking Bank of England, Federal Reserve, those sorts of public bodies which are in charge of running a nation's finances. And as part of their job, central banks hold something called reserve assets. And these assets are spread across all sorts of things, but mainly are like dollars, euros, and gold. Mm-hmm. And in recent years, central banks have been really beefing up their gold reserves. And it's a trend we've seen particularly in emerging market economies. And that has been underpinning, to a large extent, the gold price, because you've seen these huge buyers of gold increasing their demand, really.
And is it expected to continue? I mean, obviously that everything is uncertain, but
I think from what I've seen, it was a couple of years ago we saw this really big step up. That was when people really started to take note. I don't think it's meant to keep increasing at that pace. But on the flip side, you're not expected to see the demand suddenly drop away. Yeah. So you do have something there holding up the gold price.
And presumably that kind of demand is probably a little more stable than the retail money, swashing in and out, which can be more volatile.
I think so. And particularly the last 6 months, maybe, you've seen gold turn into this momentum trade. And everyone is watching, from the sofas, basically thinking, oh, the gold price is going up a lot. I want to be part of that, and sort of leaping on the bandwagon, which has this sort of self-fulfilling effect with the price.
Yes. Okay. Well, what about other metals then, Jemma? Because in particular, copper seems to be getting a lot of attention. What has been happening to the price of copper?
So copper's been going up too, actually. So this year we have seen it hit another new high of $13,000 a tonne. So obviously we're using different metrics here to gold because copper is significantly cheaper. But it's been climbing a lot and people are starting to take note.
And you see a lot of kind of excitement around it, and kind of it's the reason we're talking about it, frankly, is that copper has this role in lots of sort of future-looking technologies, doesn't it? Any kind of electrification is going to involve copper, and there's been certain parts of certain industries that have been expanding. So what's been going on there?
Yeah, so traditionally, demand for copper has come heavily from China. So the property sector in China has used huge amounts of copper because it's been building so much stuff.
Yeah.
Now the dynamics shift a little bit because we have places like the US wanting to build all these data centers. We've had huge numbers of countries wanting to increase their renewable infrastructure and like beef up the power grids, and all this stuff really uses copper in huge quantities because copper is good at conducting heat and it's good at conducting electricity. And those are two very valuable qualities when you're sort of building this kind of stuff.
Yeah, and I think that association with AI computing, data centers, I think that's probably captured a lot of the imagination because that has expanded. You know, the expectations for that have expanded so much. And that's the demand side of it. Presumably, you can't just turn on a tap and get more copper. It's a difficult thing to obtain. So what can we say about supply and its likely trajectory?
So on the supply side, people are a bit concerned, I think. So in the next 15 years or so, we're actually expected to have a deficit of copper because basically enough isn't been taken out the ground because often the mines are quite old, productivity there is lower. Been various sort of strikes, accidents in some of the key mines, which has sort of limited how much copper has been being produced. So we could be in this situation where demand for copper is really, really high because everyone wants to build, but the actual supply of it is quite restricted.
Which is a recipe for higher prices,
Exactly.
Obviously. Now, what can we say about the differences between, say, a commodity like copper and say, gold? Gold has that haven quality that we've spoken about. No one's going to be storing big, blocks of copper in a bank. So does that change the equation from an investor's point of view in terms of how they should expect these prices to behave?
Probably. I mean, I would say the investment case for copper is actually a lot more straightforward than the investment case for gold.
Right.
Because when you're thinking about copper, you want to think, well, which industries are using it? How much do they need? And how much is coming out of the ground? And basically that supply and demand dynamic is what drives the price.
Yeah.
With gold, it's much more confusing. As we've said, you've got all these far more intangible forces at work.
Because people are buying it and just keeping it. And so therefore its price and its value will be affected by inflation and the return on other risk-free assets, that sort of thing.
Yeah, and the price of gold is ultimately shaped by what people predict will happen in the world. And often predictions change and analysts' forecasts can be wildly out of whack with what actually happens. And there is this real capacity to be surprised by the gold price, which is basically what's happened over the last few months.
And copper, I suppose, is in one sense a play on those, basically on the growth of the economy in certain directions, isn't it? If it's building, electrification, or these, data technologies, it's kind of a play on those. If those are expected to grow, then copper could benefit and the price could benefit. Just finally then for today, Jemma, how can people buy copper if they want to get exposure to it? It's probably not something that's been in many private investors' portfolios over the years.
Probably not. So there are a couple of ways. One way is to buy an ETF, and that is a way to gain exposure purely to the copper price. But it does come with certain drawbacks because these ETFs are essentially reliant on the futures market, and that can make trading costs quite high. And it means they're not really suitable for all investors. So it's not quite the same as buying a gold ETF, for example, which are very popular with retail investors. So you might be thinking, okay, how else can I gain exposure? And you could move back into the equities space and think, actually, maybe I want to buy some miners that mine copper and other metals. So there are various funds that focus on miners, and that means you probably have quite a nice diversified mix of miners when you buy one of those sorts of funds. It's not like you're just individual stock picking.
Yeah.
So spreads the risk a little bit. But even something like a FTSE 100 tracker does have a decent exposure to miners. It's about 5% of the FTSE 100, I think, the mining sector.
Yeah.
So even if you're very vanilla and just think, I just want to track the UK market, you will have a tiny exposure to copper in there, along with some of the other metals.
Yeah, that's me, basically. Yeah, we spoke about this, didn't we, before we recorded, about I find that very reassuring when I read about these commodities that are going up and up. And I don't think it's hard, I think, for some of us to get over the line and commit to a specific exposure to, say, copper, or even miners or a copper miner share. But when you have the index at a certain level, you know you're going to get some kind of benefit from those price rises, right?
Definitely. And I mean, the miners have really been pushing the FTSE 100 higher in the last year or so. They have been top of the pack, driving a lot of those returns. So you will have had some exposure. Okay,
Jemma, we have covered absolutely loads there, so let's leave it for now. I will just remind you all that if you found this useful or interesting, to please subscribe to the channel. It means you'll get updated content as soon as it is released. Give us a like or share the episodes. It's going to help other people find what we're doing here. That all said, Jemma, thanks for joining me.
Thank you.